Now, one of the other questions that has come in is about Charles Schwab, which is a company in your top 10, but hasn't done particularly well over the last year. So can we talk about why you have that investment and what you expect from it going forward?
Charles Schwab has been one of the worst performing stocks within the fund this year. And at the moment, it remains in our top 10. So we still have conviction behind the thesis. So what has Charles Schwab gone through was that its earnings or the valuation has been dragged down to start off the year by the regional banking crisis in the US. So the likes of SVB that disappeared and then that have dragged the entire banking sector under the water, taking Charles Schwab alongside it. But what has actually happened behind the scene, there are two things that happened. So firstly, Charles Schwab is the largest investment platform in the US with about $8 trillion AUM. So this is very, very big number. And since the regional banking crisis started, Charles Schwab have seen more customers moving their account onto Charles Schwab. So firstly, Charles Schwab have not lost any customers on the back of that. Secondly, in terms of the customer base, they are relatively wealthy, that their average portfolio size is about $200K dollars. And at the same time, they hold about 10% cash within their portfolio. So what have actually impacted Charles Schwab on the back of that is not the business model per se, that because of a new competitor coming in or Robinhood, which obviously is not the case. It's about customers has been sweeping some of their cash balances onto money market funds, which I'm sure we have experienced that in the UK. And we would believe that that journey of sweeping the cash in the money market fund is approaching the end, that we think that now we have come to a balance of people who have about 10% cash, which is about $20,000 out of a $200,000 portfolio, that at the moment is about 50-50 split. So about 10K of that is in cash and 10K of that is in money market funds. And of course, you have to remember that Charles Schwab is an investment platform. There's a good reason why you still want to hold a level of cash so that you can make transaction quickly, rather than you buy into a money market funds. It might take you a few days before you get your money back, and then by the time you want to invest into the market might be a bit too late. So we do believe that the sweeping of cash in the money market funds has stabilized. Of course, it's not clear yet, that we're tracking the development quite closely on a weekly or monthly basis. But if that is the case, then Charles Schwab is going to benefit on the back of high level interest rate, because when you look at that portfolio of mortgage-backed securities, which is backed by the US government, that the duration is about 4 years. So every year they are able to deploy 25% of that asset into high yielding asset. So if we can if the split remain unchanged between now and this time next year, then they would be making a lot more money. So we do think the thesis remain intact.
So you're very happy to hold it.